And we start the show with some breaking news this hour with the China LPR rates set here unchanged for both the 1 year as well as the 5 year. So sticking the 1 year at 3.35%, 3.85 for the 5 year. No surprises there, just given that we did see already that 10 basis point cut back in July. But, does this mean that there's still more runway for those monetary easing support measures and the like? Some people say, look, we might have to wait until we hear more clarity from the Fed. Once they start that rate cut, we might see some more support in this recovery. In the meantime, though, let's get you caught up with how the market action is looking like here today, because the big question everyone is asking is that Powell put back in these markets? Equities have been bid up here. We saw the S&P at its longest rally in 2024, up for 8 straight days. And we're seeing that, at least Asia is gaining once again today. It's really based on that broad dollar weakness that we saw ahead of Jackson Hole. So basically, you saw the yen driving those gains across G10, across EM, FX as well, with the Japanese currency gaining as much as 1% yesterday. We're continuing on to see further gains at 146.14. So is that unwind of the carry trade back in play is one thing. Amundi expect yen to strengthen to 140 for the next 12 months or so. Euro is also, mind you, at a 2024 high. We're watching, of course, commodity markets also, just given that slump in oil overnight. Looks like we're holding on to those losses when it comes to Brent. There's news of Blinken and Netanyahu reaching some sort of ceasefire, but whether Hamas says yes is probably the next step in all this as well. And a rebound across these metals, right? With iron ore, we're seeing a little bit of recovery there in Dalian. Steel rebar as well. Copper, you take a look at the coal complex there after what has been a pretty tumultuous year for those metals. And you look at really what EMFX is looking like here today. So it's not just a G10 story, but EMFX reached a record high in the MSCI EM currency index just yesterday. Asia dollar index is also at a 7-month high. So we're watching very closely how this region, and there you go, you continue to see gains across the board when it comes to the Thai baht, the Korean won. Those are what led those gains yesterday. You're seeing that with the ringgit here this morning and the Taiwan dollar as well. Renminbi, keep in mind, also hit a fresh new 2024 high here. Not quite done yet with these superlatives. Onshore and offshore we're talking about. At one point weakened to around with dollar yen actually dropped to around 712 at one point as well. So the approach to the open, of course, we're looking at the currency side of things as well. We'll watch very closely what the PBOC is going to do with that fix here today, whether they welcome this stronger currency too, Dave.
Yeah, and certainly at these levels, right, you are continuing to see not just downside, substantial downside in the U.S. dollar going into where we are as we speak. In fact, to Yvonne's point, right, so it depends which benchmark you're looking at. The Asian dollar index 7-month high. The dollar index ICE is at the lowest here since 2024. Some of the technicals indicate this might look slightly extended. Dollar looks slightly oversold. But then again, have we turned a page on this policy print, and are we looking at now a Goldilocks scenario being priced in, this money moving back into EMFX? Marcus Wong, our Bloomberg macro strategist, joins us right now to headline the show for us. Marcus, can this continue?
I think that's a brilliant question. I think the conditions are, in a sense, quite right. I mean, markets love the fact that, when the Fed cuts rates by the non-US recessionary scenario, and that's what we're seeing so far. Prints in the US, while weak in terms of labor, but, retail sales is doing quite all right. So, but it's just, I might just emphasize, it's not just about the US story at this point in time, because in Asia, maybe Asia ex-China, and especially true for Southeast Asia, we've seen very good prints, across the board. I mean, look at second quarter GDP for Malaysia, it was close to 6%. Earlier prints actually exceeded all estimates. In Thailand, when the Constitutional Court first, voted, when the Constitutional Court actually initially called for the removal of Srita, there was a big concern that there would be a political vacuum in Thailand. But since then, there was a new PM that has been voted in, and these fears have ebbed. Even in Indonesia, just a few months ago, there was talk that, that Prabowo's incoming administration will be very profligate. But what we saw at the, budget announcement on Friday is that, a 2.5 fiscal deficit, something that, investors like, something that's all about fiscal consolidation. So what I'm trying to say with this is, can it extend? Well, but of course, it will really depend on how Jackson Hole evolves on Friday. With the discussion about Fed put and such and so on and so forth. But I would dare argue that even if if there is not a strong Fed put, as long as Powell stays his course, I think there are very strong elements in Asia that continue to support this Goldilocks scenario in a sense.
You're also looking at call and put options, Marcus, on the dollar. I mean, what does it say about the direction of where the greenback's going to go and what this means for Asian currencies?
Well, I think what it shows is that the market is actually quite finely balanced moving forward. I mean, for the big part of especially the first half of this year, it was a very strong dollar story, higher for longer Fed, and so on and so forth. But looking forward, the Fed is going to cut rates, but so is much of the rest of the world. And also, although we've seen less talk about a U.S. recession. Maybe we may not be totally out of the woods, and some data might still surprise on the downside. But neither, there is obviously no talk of U.S. Growth exceptionalism instead. So we have this environment where, if you follow the dollar smile theory, it could be a marginally bearish dollar moving forward. But again, when we pair this with the rather robust data coming out of Asia, it's something that definitely investors are keen in. And when you look at the rest of the world, Asia is actually not a bad place essentially to invest in.
Marcus Wong, thank you so much. Our macro strategist there, getting us up and running, of course, this dollar weakness story continuing into the region today. One thing to note, though, we were talking about technicals, and it might some point mean that we are bound to head into consolidation here. As you can see, the dollar is looking slightly oversold now against many across the Asian EM complex. You're looking at the 14-day RSI. Of course, this can continue, of course, goes without saying here as well. Now, what's interesting, though, is the strength in, let's say, the Japanese yen has taken place against really the lack of a sell-off, unlike 2 weeks ago where you had the strength in the currency and this crash in risk assets. In fact, going back to that point, Asia-Pacific stocks, as you can see here on this chart, we've now completely reversed all the losses from that bad episode 2 weeks back. Can this Goldilocks scenario continue for equity markets? Joohee joins us right now, CIO of Mirae Asset Global Investments. Good morning and nice to see you.
Good morning. Good morning, Yvonne. Good morning.
Can it continue, this momentum in equity markets?
Definitely, we have to hear from Jackson Hole this Friday, and also we are going to have another event in Japan this Friday as well. The governor, the BOJ governor, will appear in the parliament. So we have to hear how hawkish or less hawkish his tone will be. Right. So I think that was one of the reasons for the big volatility 2 weeks ago.
Right.
So I think we have to wait. And also now we feel much more comfortable with the latest data, better than expected data in the U.S. But again, early September, we have to wait for job data of August. So that was right before the FOMC, in September. So I think now we feel our base case is still no recession, more like a soft landing in the U.S. And then a more kind of synchronized rate cut cycle, which is beneficial to emerging market going forward. But for the upcoming months, until at least a U.S. election, also still, uncertainty over the probability of the U.S. recession is still there. So we have to be prepared for the more, market volatility to come for the next, at least like a few months, I think.
Yeah, I mean, is there a risk here that this soft landing scenario, gets ahead of itself again? I mean, we saw that a few weeks ago, as you mentioned. I mean, are we just one bad data print away from seeing some more market volatility again?
But again, every month, data was ups and downs. And then, and it's not only in the U.S. and also, again, in Japan as well. Now it's a kind of big, factor to move the market. So we have to keep watching. And then, especially for the next few months, it's very critical because we don't really know the kind of clear direction of the, Democratic or Republican, the parties' policies and against China or against the tech, the industry, or so many things are still unclear. So I think that's why we are just trying to be still the bottom up and also trying to take advantage of market volatility as a good buying opportunity for good quality names rather than just macro play.
So what are the biggest tactical changes you've made given the recent market volatility?
We thought that we still actually didn't change our underweight, overweight positions in our portfolio. So we still have maintained overweight positions in India and Taiwan. So that means we are still positive on the overall technology, development, investment cycle globally. And also we are also positive on the structural growth momentum in India. So more kind of domestic driven kind of growth will be much more safer going forward. So when there was a big market volatility a few weeks ago, we actually tried to utilize that to buy on dip for some good quality names that we were watching in India because India was, either way, it was a safer. That's what we thought.
And China, I mean, has this earnings season given you any insights of what the rest of the year is going to look like?
Yeah, in China, still long term, we have a belief in that China is going to kind of show some breakthrough in technology, kind of, like a bottleneck, or in long-term perspective, they will get closer to kind of self-reliance in the technology, although it will take time. But in the near term, we still have underway positions, because in the near term, the latest earnings season actually confirmed the very weak domestic demand again.
Yeah.
So if you look at the details of the earnings results in China, actually the companies that benefit from down trading trend were better, and the consumer staples were better than discretionary, and also some like online companies were better, mostly driven by cost-saving efforts rather than top-line surprises. So that actually shows that still domestic demand is still very weak. That's why we have still underway position in China.
Yeah, I mean, going into this earnings season, we saw, I think, April and May, positive revisions to earnings forecasts in China. Do you expect then revisions downward to resume?
I think so. Overall, if you look at the MSA China, still the forecast for this year is actually low teens, so 13 or 14%.
Ooh, okay.
Yeah, so I think it has some room to be cut. But although, like I said, some companies, thanks to their very good efforts on cost savings, actually their bottom line was better than expected. So that's why we have a very selective positions in China, still mostly dividend yield or kind of online companies. Because the online companies, they already went through the very hard time earlier than the other sectors because of regulatory crackdown in 2021. Yeah. And then, so their cost saving efforts actually started earlier than the other companies. That's why we are still positive on those selective sectors. But overall, we still see some earnings cut possibility for the rest of this year.
But you're still looking at tech in China as maybe a positive.
Yes.
Yeah.
So that one is a little different, because we still think that that investment and then efforts, government or private companies or SOEs, their efforts on the self-reliance on technology will continue. That's why I think even like the earnings was also okay, and the utilization ratio was actually better than expected, of the main technology companies in China. So we are positive on that, thematically. Yes.
What's the biggest risk you're looking to manage in your portfolio? What do you think might cause, I would say meltdown, but a pain trade across most of your holdings?
Our base case is soft landing, as I said. So if the data in the U.S. will be much worse than expected, then recession risk is going to come again into the market, and also that the unwinding of yen trade actually created the big market volatility. So even from bottom up and quality focused investors' perspective, that kind of big the market volatility was quite hard for the outperformed kind of the stocks as well. So our portfolio is not like a very highly trading the fund. It's more like a buying and holding strategy for a long-term perspective. So that kind of big market volatility could put us in kind of short-term underperformance period. Yeah.
Okay, Joohee, thank you so much for joining us. Joohee An there, CIO of Mirae Asset Global Investments. Coming up on the China Show to discuss the bid by the Canadian owner of Circle K to buy 7-Eleven and what could be the biggest foreign takeover of a Japanese company. We're counting down the opens of trade in Shanghai, Shenzhen, Hong Kong. It's a gloomy day in Hong Kong. I believe it's still an amber rainstorm. There you go. You see the clouds looming there. Futures, though, are pointing higher this morning. This is the China Show. All right, that renminbi fix just crossing your Bloomberg here right now, and it is a 713.25 handle, so a little bit stronger than what was expected here, just given this massive dollar weakness that we're seeing that really is lifting the renminbi here to, 712 levels here right now. So we're still talking about the highest that we've seen for the renminbi all year so far, Dave.
This downhill snowball is extending into the Asia Pacific, as you can see there with the Chinese currency, with the rest of Asian FX. That's going to come up on your screens. Just about red across your boards: Thai baht, Korean won, Malaysian ringgit, Taiwan dollar, and the story across majors and the euro, of course, as Yvonne is pointing out, highest now for the year. And we have entered the range in the euro, testing cycle highs at about 110 towards the low 112s. Watch it very, very closely, of course, today.
Yep, we're watching one stock very closely here today, which is 7&I shares in Tokyo. Well, tumbling, but then again, I mean, it surged some 22% yesterday. So just a slight giving back of those gains that we saw as it considers a takeover offer from a rival. We're talking about Canada's Couche-Tard has made what it calls a friendly offer that could lead to the biggest ever foreign buyout of a Japanese company.
Yeah, for more, let's bring in Stephen Ingles, our Chief North Asia correspondent. I mean, Steve, you profiled this company earlier. You interviewed a CEO. How significant is this if it does go through, of course?
Yeah, if it goes through. That's the big question, right? There's going to be some antitrust regulatory scrutiny of this. There's going to definitely be scrutiny by 7&I Holdings. In fact, they put out a statement late yesterday saying a special committee of independent outside directors will make a, quote, prompt careful and comprehensive review of this proposal. And what that proposal is, as you rightfully said, Couche-Tard of Canada. They're the owner of the Circle K brand, a smaller but higher market valued company and convenience store operator, making a push for 7&I, which of course has ownership of the ubiquitous 7-Eleven brands. There was 21,500 of those mini marts across Japan, 6,000 or so in Taiwan. They're all across Asia. In fact, there's 85,000 or so convenience stores, 7-Eleven convenience stores around the world, compared to Couche-Tard, which owns not only Circle K, but another convenience store brand. They have just 16,700 stores. Now, the key, though, has been the valuation. Because, again, Value Act Capital has been, this activist investor has been pushing for quite some time to get 7-Eleven to unlock shareholder value, kind of hive off the underperforming Ito Yokodo department store. And in April, 7-Eleven, after that interview I had with Isaka-san, the CEO, essentially kind of acquiescing a little bit, saying we're considering spinning off Ito Yokodo. They already last year got rid of another underperforming department store, Sobo Seibu. And again, they also have 7&I Bank. They also own the Japanese franchise of Denny's restaurants. But the real value is the 7-Eleven brand. So I just want to give you some statistics. 7&I has 85,000 stores worldwide. They have a market value of $38.5 billion at the close yesterday. Couche-Tard, much smaller footprint, 16,700 stores, market value of $58.5 billion. So that's the kind of market value that Value Act Capital is looking to unleash. So again, a little bit of apples and oranges there. The smaller company trying to purchase the bigger one, but it doesn't have that valuation.
Yeah, you got to ask if it makes strategic sense is one thing, but then again, you said if it goes through, right? Are there competition hurdles that we need to look at too?
Yeah, and there are hurdles, of course, in Japan because it's really unprecedented to get a foreign buyer to come in and have this type of deal. Yes, there are changes in corporate Japan. Yes, the yen is fairly weak, even though Nomura put out a note today saying the yen could appreciate just on this deal alone. It's already starting to appreciate a little bit. It's at 146 or thereabouts, not in the 163 handle that we saw a few weeks ago. But again, Japanese stocks, as a trend of rising, the yen is starting to strengthen after it's still pretty weak historically, right? So there are some trends going on here. And Alain Bouchard, who is the head of Couche-Tard, has been eyeing 7-Eleven for a long time. He likes the footprint. He likes the footprint. It has more stores in the United States. It has a presence all across Asia Pacific, which Couche-Tard does not have. They have about 1% convenience store market share in Asia, Couche-Tard and Circle K, whereas 7-Eleven has about 30%, 31% market share. So there's opportunity there for Japan, but Asia as a whole, and of course the United States, where 7-Eleven, 7&I Holdings, they bought Speedway and Konoko last year to build out their footprint in the roadside pit stops, if you will, which also have convenience stores. So a very interesting development here, and it could see more action in Japan as well.
All right. Steve, thank you. Stephen Ingles, our Chief North Asia correspondent there. And yeah, it wasn't just that deal itself, right? We saw many. There was Mars and Kellanova. We have some other big news in the M&A front that we have to tell you about as well, that Bloomberg has learned that Paramount could extend a deadline for rival takeover bids. And that's if longtime media investor Edgar Bronfman Jr. makes an offer for the company. The parent of CBS and MTV agreed last month to combine with David Ellison's Skydance, but the terms allow Paramount to solicit and consider other offers during a 45-day go shop period, which expires on Wednesday. An AMD shares surge in New York after the company announced it's buying server maker ZT Systems. That's in a cash and stock transaction valued at nearly $5 billion. ZT has extensive experience making server computers for owners of large data centers. The takeover boasts AMD's efforts to challenge NVIDIA, which has been the runaway leader in the market.
Well, speaking of tech, going into the session, the Tuesday session, HS Tech Index has capped its best 2 days in 5 weeks, and we are set to extend the tech rally here in Hong Kong for a third-day preview of the trading day ahead. This is the China Show. We're going into the Tuesday session here with the risk rally on hand. Chinese currencies at the strongest level so far of the year. That's number one. Number two, this tech rally now set to extend for a third day. Some data coming through today, visitor arrivals and also inflation numbers coming out of Hong Kong. But the story really is this risk rally we're seeing across markets right now. And it looks like we're set to open above the 50-day moving average. We can talk about this later on the Hang Seng China Index.
Yep, and they are joining in on this equity rally. Take a look when it comes to the Hang Seng pre-market. We're here right now. We're at about 92 points to the upside. HS Tech is catching a bid here today. We have Kuaishou earnings to tell you about as well. And we're talking a little bit more about that dollar weakness. There you go, 712.62 for dollar China this morning. So certainly we did see a little bit of pushback from the PBOC. Not really, but really was still reflecting that strength in the currency as well. The open is next. Welcome back. You're watching the China Show. We're counting down the open of markets, and it looks like we could be continuing on with a positive story here today when it comes to equities, with the Hang Seng up about 0.5% in the pre-market. The strength of the currency, certainly in the renminbi, 712.55. We did see when it came to that fix from the PBOC, it was set at the lowest for 2 weeks, but still above that 713 handle. So still, this is a central bank still not endorsing this strength too much in the currency, just given that drop in the dollar that we've seen across G10, FX, and EMs.
I mean, it just might be the anchor we need, right? Asian currencies, we were just talking about this yesterday, was already quite an extreme move. And I personally thought that we would see this consolidate today, but, you're wrong 100%
you're
of the
wrong
time.
Today.
So I am still at least fairly consistent with my track record there. And as you can see, the Chinese currency, we're looking at EMFX continuing to see some strength today. Some strength a little bit coming through across, and CSI 300 coming through. The benchmark region-wide has now, recouped all the way back to July levels as far as the price is concerned. The story, though, is in Hong Kong where, and by the way, we're getting a couple of things. We'll talk about the RBA minutes in just a minute here. Very quickly, Hong Kong is looking like a third day, a rally for a third day as far as tech goes there. I think we are looking at the best 2 days in 5 weeks. So just extend it even further. Tencent, Alibaba, as you can see on your screens, fairly mixed there. Meituan, Kuaishou is coming out with earnings today. We'll talk more about that in a moment. TYK Medicines, okay, that's a company that's debuting today in Hong Kong. We should be up double digits last we checked. There we go. Good doctor for you. 18%. To the upside, surging its debut today. We talked about earnings, so I think we had some coming out of Will Semi and Midea. Coming out today is Xpeng and also Kuaishou. So the appliance maker came out, beat estimates as far as that was concerned. Will Semi, I think, reported earnings. I forget the absolute figure. My producers are about to tell me, coming up on your screens. I think it was up 8x on net income, not profit specifically, on net income from last year. And yeah, there we go, 1.37 billion. Thank you so much. And Xpeng and Kuaishou are due out later today. Before we get to Kuaishou, though, the minutes are out from the RBA.
Yeah, so it kind of reiterates some of the hawkish commentary we heard from Michelle Bullock there after that August meeting. Basically, they have to signal extended period where rates are going to stay at the cash rate of 4.35%. So that's a 12-year high. So, the fact that, really the reality is the RBA was one of the more, slower central banks to, tighten policy. So therefore, they're going to be one of the last to maybe actually ease policy, despite the fact that we saw that cut from the RBNZ, from England and the like here the last few weeks. So certainly they are kind of dealing with a bit of a policy conundrum with the rest of the world. But then again, they're still talking about inflation. The risk of CPI not reaching a goal in a reasonable time has risen. Yeah,
in fact, I think we have a piece now online on the terminal. It compares really where the certainty at least some central bankers see, like the Bank of England and the ECB. And Michelle Bullock, in that press briefing from August 6th, she said, I wish I had their certainty on data. So sometimes you wish you were Jay Powell, right? Anyway, okay, let's pivot back to the micro right now. This big earnings story coming through. You have tech, more key earnings coming out this week. You have short video from Kuaishou is set to report in a couple of hours. Our tech reporter, Belle, is here with us for a preview. And what to expect out of Kuaishou.
Yeah, so we're still expecting growth, though probably not the level of outperformance that we've been seeing over the past few years, really. So we've been sort of in double-digit territory for sales since at least 2020. Now we're looking to go into the single-digit territory, so around 9.5%. That's the consensus on the year. About half of that is going to come from live streaming. The rest is from other services. That's, again, what analysts are saying here. Net income that could have doubled from 12 months ago, but still on the quarter it's going to be perhaps quite a significant drop.
In terms of the risks, I mean, obviously there's been a lot of competition in this space too right now.
Yeah, absolutely. I mean, one of the most direct is Douyin, which is sort of like the sister, I guess, or sibling of TikTok in China. But it's been bigger than Kuaishou for roughly 7 years now. But then you've got other players like Alibaba, Tencent in particular, that perhaps neglected this sort of short video app service for a while, but now they're investing heavily in the space. And so that's sort of one of the key risks, just that intense competitive environment that we see across a lot of different tech sectors in China. And then you as well got those risks to e-commerce sales in particular, and that's more of the story of the macro one, which is a weaker consumer in China as well.
All right, Anna will stay with us. We have to talk a little bit more about this new video game because I don't know anything about it. Black Myth Wukong. The title was years in the making by a Tencent-backed developer. Let's bring in Robert Lee. He probably knows more than we do from Bloomberg Intelligence. Let's start with the basics. Humor me a little bit. What's this game about?
Okay, in general, I don't get nervous about most things, but my teenage son is a massively keen gamer, so nice. I guess this interview is going to go down in family history if I make a mistake.
It gives you good intel,
get something wrong. Or yeah, I could get a little kudos from it. Who knows? So yeah, Black Myth Wukong is based on the classic Chinese story, Journey to the West, a story about the Monkey King, which is, well known throughout all of Asia and China in particular. So it's a PC and console-based game that's been developed by a company called Game Science, which Tencent has a minority stake in of roughly around 5% based on the latest filings. So the pre-sales on this game have been very strong. There's a lot of high anticipation. It's been quoted in the press as a AAA game. I mean, there's no official definition of a AAA rated game, but there's very high expectations. So I think it's a game that should make headlines, should restore some confidence to the growth outlook to the sector as a whole. But I guess the reality is, with a 5% holding, the upside, the earnings upside to Tencent is going to be somewhat limited. So good from a sector.
Yes.
Tencent benefits from the headlines, but, realistically, are we going to see earnings upgrades on the back of Tencent?
Well, they should have bought more.
What they should have done. It's a woulda, shoulda, coulda. It's like, any of my trades. They're all 100% successful on that basis with hindsight. Yeah.
Okay.
Maybe I can provide a little bit more context on the AAA side, because this, as you said, has been what's been dubbed as a AAA game in China. There's no official hierarchy in the gaming space, but AAA is really significant because it's sort of equating it to either a mid or a larger size developer that's got a big developing team behind it, a big marketing budget behind it. So you're pretty much the equivalent of a Hollywood blockbuster for this, except what's really notable is that it's coming from a Chinese game developer, and we have not seen that before. So usually AAA games are developed in Japan, the US, Europe, and so this is really significant in China for that reason, that it is this AAA game, because typically we've seen more of these free-to-download games where you've had these in-game purchases, and that's how the developers have been gaining revenue from them.
Okay, what does it mean for the company Tencent? I mean, everyone's been talking about this pipeline of games coming too.
Well, yeah, I mean, you were just reflecting there, Robert, that perhaps Tencent doesn't have such a big stake, but still when you take a look at where we are in the gaming cycle generally, it's an important moment because you had sort of a lot of people gaming throughout the COVID years. That shifted away a couple of years ago. You haven't seen any games being developed, and in China that's really the story of more of the regulatory concerns because China just was not issuing gaming licenses. Now you're getting more that are getting the green light, and so it's telling these developers to move ahead and continue pushing out these sort of big title games. What it means for Tencent, particularly their gaming revenue, and Robert's definitely going to have more context on that, but we have seen it really taking up and really gaining steam. Particularly in the latest quarter, after a number of periods of where we haven't seen any sort of domestic games business growth. You've got low baseline, new games coming online. That's broadly positive. How long it extends for, perhaps until the end of the year. I did speak with Wei Ling from UBP. He said perhaps even in the first quarter of next year, but maybe Robert has some different views on that.
Okay, Robert.
Okay, no, I think the momentum within their gaming business can definitely continue through the rest of this calendar year. Yeah, maybe into the early next year. But if you look at consensus numbers, we'll get a normalisation in their gaming growth next year. So, again, in line with slowing economy, just as I say, a normalising of, once the short-term impact of these game releases has washed through. So, looking at growth in the 10 to 12% range next year, which is healthy growth, but won't match the growth we've seen this year. So I think, as I've said before, you're only as good as your next hit within the gaming world. Yeah. So it's all over, what's in the pipeline for next year. So we'll have to wait and see.
Just to change gears, let's talk about Alibaba. I think you put a piece out as well. I think the stock is up. Well, it depends how far you go back. I'm looking at all the way back to early July. We're up 15% on the stock. Have we turned the page here on Baba, and why?
Yeah, I guess if you look at the rally we saw in the HS Tech shares yesterday, it was really the underperformers, those that are trading on lower multiples. Arguably, mainly focused on the e-commerce sector. So is it a bit of short closing, post-results? Is there genuine follow through? We'll have to wait and see in the following weeks. So these stocks are certainly, very low expectations priced in, and they've actually on Alibaba in particular, I think people took confidence that maybe their cloud business has bottomed out. But is that a sustainable trend or not? Again, I think we'll have to wait and see.
There's an AGM for Alibaba this week too, Belle.
Yeah, that's just the other thing I think to note is that you'll have, as you said, that AGM coming up this week, and you'll see that shareholder vote on shifting the primary listing to Hong Kong. That is basically a go-ahead because it's in the shareholder interest, really. If you get a primary listing here, it means it becomes eligible for the Stock Connect, and then you could see further inflows into the stock off that. So, again, like another positive factor supporting the equity levels there.
All right. Thank you so much, Belle, and of course Robert Lee there on all things tech and all things gaming here. We'll leave you. We just would look at how we're doing in the equity markets. We're doing better in Hong Kong than we are in China, although onshore. Oh, okay. I was about to say it was up, now down 0.4%. The big story continues to be the softness in the U.S. dollar, particularly against EMFX, with the yuan trading now at the strongest level of the year. This is the China Show.
Well, it seems like there is a price war that is spreading across China's new home market as local governments dial back on intervention and developers race to recoup cash. Let's bring in our China correspondent, Min Lo. So we see at least 10 cities, Min, that have scrapped or at least relaxed their price guidance on these new homes.
Yeah, so this started because the central government had pledged to let local governments have more room to set prices. So now at least 10 cities have either scrapped or relaxed those home pricing guidance that was really put in place to prevent price gouging back when China was experiencing a property boom, which feels like a really long time ago. And those price guidance were left in place even during property downturns to ensure that home prices remain resilient. And that led to this distortion of prices where you see sometimes second-hand home prices free falling, but then new home prices still staying quite elevated, and that led to this fundamental shift in consumption patterns. Last year, we saw for the first time more people buying second-hand homes because they are just so much more value for money. So now with this relaxing of the home prices guidance, we're seeing a price war going on with some properties in Beijing, for instance, asking for prices as low as 31% below the government-guided prices. The Shenzhen government recently approved a 29% price cut to the unit price of a property compared to its year-ago prices. So that's likely to also force the hand of the adjacent property developers to also offer steep price cuts as well. And it might have the unintended consequences of causing some buyers to stay on the sidelines as they wait for the bottom to come.
Yeah, well, yeah, it cuts both ways, and I would imagine, might this, though, help attract buyers that have been waiting for these new homes that thought they were overpriced now to come back into the market?
Yeah, it might take some time. The market may get worse before it gets better, because suddenly housing prices is going to continue declining for likely the 15th straight month in August. And bear in mind as well, you still have, 60 million unsold homes in the market, which could take 5.5 years to be absorbed, given the current rate of sales. The period that it gets to be absorbed may be shortened if the rate of sales pick up because of the fall in prices. And you still have 48 million pre-sold homes that are not yet completed, that could take 8 years to be completed. So still a long road ahead. And bear in mind as well, you have at least 20 property developers facing wind-up hearings who are banking on this revival of sales to assuage debt holders and to fight off liquidation. And if sales doesn't pick up, more developers could be at risk of defaulting. And you got to also wonder, with more people feeling like the property prices that they have is falling, they may feel like their wealth is being wiped out. So what is that going to do with for consumption? That's going to take some time to restore as well the confidence back into consumption sentiment.
Yeah, it's a big spiral in some ways. But yes, it's interesting to see that Beijing and Shenzhen, these mega cities, are doing the same thing as well. Min Lo, thank you, our China correspondent, joining us there as well. Some other corporate stories that we're tracking for you today. Yeah, let's have a look at, as Min was pointing out, of course, some of the winding up hearings here. So mainland Chinese court has accepted this liquidation application filed against a unit of China Evergrande Group, ramping up pressure on the defaulted developer. Evergrande is being liquidated in Hong Kong, where it's listed. Now, the ruling on Guangzhou Kailong Real Estate suggests it may face the same fate in mainland China. Now, Bloomberg has learned that GM, General Motors, is cutting more than 1,000 software engineers, with the majority of the layoffs in the United States. The company confirmed the cuts in a statement without specifying how many people were affected. GM had been hiring rapidly in the space in recent years as part of its push into EVs and self-driving cars. Now, GoPro shares gained after the bell as it unveiled plans to cut about 15% of its workforce starting in the third quarter. The action camera maker has 925 full-time employees. Now, the company sees a restructuring charge of $5 to $7 million, that's US dollars, with the majority of it expected in the last quarter. And coming next on the China Show, we'll get you to the latest on the U.S. election, with President Biden set to speak as the Democratic National Convention gets underway in Chicago. This is Bloomberg. All right, live look at Chicago now, where about an hour's time we'll be hearing from President Biden on day one of the Democratic National Convention. Of course, we did also just have a few minutes ago a surprise appearance from the Democratic presidential candidate there, Kamala Harris, before I think she makes her speech later on this week as well. But the one thing she said is also, we're here to also celebrate Joe Biden today.
Yep, who is scheduled to speak. I think this was her surprise appearance a couple of minutes back here. So we just heard from, I believe, AOC. Hillary Clinton is set to speak, I think, in a couple of minutes. And then Jill Biden, of course, I believe, based on the schedule that we have right now, it will then come on stage then to, of course, introduce her husband, of course, the president.
And I think they're going into this and trying to find a balance, right, the Democrats in some ways. And on the one hand, they want to celebrate Joe Biden and the legacy that he has left behind, but also it's between them balancing how to pass the torch to this new generation of leaders for the Democratic Party as well. So certainly that was one sort of theme that we're going to focus on here today, I think, in Chicago. But yes, we're just about a few minutes away, maybe in the next hour, we will hear from the president himself.
Yep. Okay, we're set to hear from that as well. Yeah, just in terms of, so we are just starting off, of course, a really big week as far as this is concerned. So this is multiple days, of course, where we begin today. In case you missed it, earlier on, we did get a surprise visit, of course, from Kamala Harris there. She was supposed to be, well, she is still going to speak, of course, later on in the week to cap things off and this big gathering, of course, in Chicago. But as Yvonne is pointing out, they're there to celebrate the U.S. president, who we believe is, of course, set to speak in about, if these schedules are still on time here, in less than an hour from now. Let's bring in Vonnie Quinn. She's in Washington for us, covering U.S. elections for us this week. Vonnie, let's start with a surprise appearance from the vice president.
Yes, indeed. We got about 2 minutes of remarks from Kamala Harris. She pushed ahead to that speech that you just mentioned, David, from President Joe Biden, the keynote speech for today. The theme, of course, for the night is We the People. And she gave some remarks that she has been giving on the campaign trail, rallying the troops, a very happy-looking Kamala Harris, seemingly also taking the second gentleman by surprise by jumping up on the DNC stage. He mouthed to somebody that he wasn't expecting this either. But she, you know, it is her convention. I mean, Joe Biden will be passing the torch and then essentially heading away on vacation for a few days to California, a symbol really of how he is leaving this to her after this. This is not his convention anymore. It would have been had he not stepped off the ticket. Obviously, he's off the ticket now, and it is hers to go forward. The roll call has already been done, as we know, but what the DNC is calling a celebratory roll call will take place this week, and the DNC has already adopted the party platform, so some administrative things going on, as well as a lot of celebration and a lot of different voices. Progressive politician AOC, Alexandria Ocasio-Cortez, just speaking a few moments ago, some union leaders also today, and obviously some celebrities and influencers as well, we should say.
Yeah, I mean, we're seeing it right now. Hillary Clinton is stepping on the stage. She's about to speak. But as you mentioned, it seems to mark a bit of an awkward end to Biden in his presidential campaign, I guess. Is that likely going to kind of continue to hang in the air of the convention this whole week as well?
It's hard to say, Yvonne. It's not really a moment for awkwardness in many ways, because this is the first sort of public convention since pre-coronavirus times, right? So it's 8 years since these 4,700 delegates, or, 4,700 delegates from the Democratic Party were together in a big convention center like this. So, and in a sense, it's their opportunity as well to sort of say thank you and to celebrate Joe Biden. And he is, as I say, leaving tonight, so it's not like he's going to be hanging around and making it awkward for everybody else. And he does have 5 months of his presidency left, and he will want to make some changes and also be on the campaign trail. So it's important that he sort of gets it out of the way, and then he can campaign on behalf of Kamala Harris. He also very much wants to make the point that his administration achieved things, and that her administration, if she is to be elected, can build on those things, including some improvement economically, and also the idea that democracy needs to be protected, and she's the person to do it, that he's been doing it for the last 4 years or so. The theme, again, as I say, is We the People tonight.
Vonnie, thank you so much. Vonnie Quinn there in Washington for us. And for Bloomberg clients, of course, terminal subscribers, you can catch the latest on these nationwide and state-by-state polling averages, as well as up-to-date election odds, and also news, by the way, towards the bottom here. On your terminal, of course, WSL Space Election Go is the function that, of course, you run. Right. Very briefly, so we're still tracking these movements in the currency space. We're looking at majors first, and I promise you we'll get to EMFX in just a moment. That's really where the story is. So dollar weakness continues, as you can see here, against the Chinese currency, although we've come off lows of the day on dollar China. Dollar Japan, as you can see, 146. Euros flat, but that's really reached almost, we're testing cycle highs as far as that's concerned. EMFX, please, can we fire that if we can? We do have that board, so it's continuing to see some strength coming through against the Malaysian ringgit, the Thai baht, the Thai $1, and there we go. Thank you so much. And the South Korean won. These are very substantial moves we're seeing at this point.
Yep. And yeah, so certainly there's a lot of questions about, if Powell delivers, right? I mean, you're seeing a lot of optimism about this soft landing scenario just days before that speech. Yeah. A lot at stake here. This is Bloomberg. Welcome back to the China Show. Here's a look at the HSI just a half hour into the session. And just like how crazy this weather has been, it's been a whipsaw here across markets. We basically have reversed the gains that we saw in the last half hour. So we're now down about 1/4% on the Hang Seng here today. Dave, what else are you watching?
Yeah, we're looking at what's happening across the FX space. In fact, I'll jump straight to that if we can, please. So we're looking at the dollar continuing to soften here across most of these exchanges. And as you can see here, of course, Yvonne, dollar Korea, dollar Taiwan, not on your screens. I should also mention dollar Malaysia. The ringgit is now actually back, if I'm not mistaken, back to levels early of 2023. In fact, just have a look at this graphic I have right now just to tell you what the currency story looks like in the region right now. So have we actually reached a point where we might see some consolidation? Some of the technicals suggest we're there, although these technicals, I should also emphasize, we're flashing the same signals going into today, and we're still seeing the dollar continuing to move lower. A reading below 30 on the 14-day RSI does signal, of course, we might have gone a little bit too far too quickly. And in some cases, like the rupiah, for example, a reading of 19 is certainly way, way below that certain threshold. Now, let's take a step back from EMFX. Well, this is really where the bulk of the move has really been. One currency to watch very closely is the euro, right? So the biggest chunk of the dollar index, ICE basket. We have now entered this range, and we're now pushing towards the 111 mark right now, within this range where we're now about to test cycle highs. And back on the point we were making on momentum here, this move is actually coming on the back of very strong momentum as well. So what this does, you look at a dollar index, for example, that actually has shown now the opposite as far as the 14-day RSI is concerned. And what's interesting also, Yvonne, is that this dollar weakness is coming through. We're getting not the same amount of risk aversion that we had 2 weeks back, which I guess is a good thing ahead of Jackson Hole on Friday. Yeah, you got to wonder, though, that's the question of the day today, right? If that dollar yen continues to strengthen, at what point does it actually spook markets that we're bringing back this unwind, that carry trade once again? Let's ask those questions to Daniel Gerard, Senior Multi-Asset Strategist at State Street Global Markets. Daniel, it's really an FX story here today. We'll talk about equities in a bit, but is the path of least resistance right now for the dollar to further weaken from here?
Well, I think for now it is. Markets are pretty attuned to this entering the rate cut cycle, and this is going to dominate the market activity for a while. We'll see what we hear at Jackson Hole on Friday. I don't suspect we're going to hear anything that will derail that case. But I said for now because we still need to worry about the growth story quite a bit. So we got a bit spooked. We got some volatility. We had a carry unwind, and then we had some risk appetite come in. It's been a bit wobbly, but this has been the story of markets. This positive optimism of a bias that we can actually get some weakening without tanking or without experiencing a lot of downside draw to growth, and especially in the emerging market space. And can we maintain that? We'll have to wait and see. I'm a bit more skeptical. I think that we have a lot of work to do still and a lot more to see before we can declare victory.
Right. So, I mean, we're going into this with, just to bring up Daniel, the case in point, I think about 3 or 4 weeks back when we had this flurry of big tech earnings coming through where you are in the U.S. And, markets had an extremely high bar to be impressed. And we're moving into not just Jackson Hole, but NVIDIA's next week, which could determine, of course, the course of where this risk rally goes. So what signs are you actually seeing that markets are sleeping on this recession risk?
Well, look, I think the part of the problem is a communication issue. The Fed has been so focused these days on discussing the dual mandate. The dual mandate is their goal, but very differently from the way Bernanke or Greenspan used to do it when they got very technical about what they're seeing in the internals of the banking side of the market. That was their expertise and their focus. Powell really concentrates on what do we see with jobs, what do we see with price stability, and it's been going in the right direction. So it's hard for people to understand we need to move to a cut. But when we look at credit creation and the propensity of businesses to create new liabilities to finance fixed asset consumption, for example, we are seeing, fixed asset growth, we are seeing a real slowdown in credit creation. That should worry us. It's very difficult to get to maintain growth or accelerate growth when credit is drying up, and whether it's in commercial and industrial lending, whether it's in the consumer now, all of that is now trending towards zero. And that's not a great place to be in if you expect a reacceleration, especially of nominal growth, the way corporate earnings are measured.
What does it mean for equities then, Daniel? Because you're seeing basically this S&P is almost forgetting what happened just a few weeks ago. Yes. Do you think that there's this refreshed optimism when it comes to equities, or are we just talking about short covering or something else?
Well, look, I think it is refreshed optimism. It is this belief in the Goldilocks story, which, again, I'm quite skeptical of. But it's this belief that we're going to get just enough cutting to reaccelerate credit, to continue to grow earnings. But what did we see that was actually quite fascinating during both the drawdown and the run-up again was, maybe just a few weeks before that, everyone was talking about the small cap value rotation and the cycle out of tech and into something else. But what happened? It doesn't matter how you cut it, whether it was the US, Europe, emerging markets, Latin America, Asia, value performed the worst in both the drawdown and the run-up. The best factor exposure was actually quality, dividends, earnings stability. That's what people want. That's what we're actually seeing in our institutional investor demand right now. They are looking for defense over cyclicals, and they're looking for quality earnings. And a lot of that's in tech, and a lot of that's in the defensive growth areas, healthcare and staples. And where margins, especially where margins have been quite stable and there's decent earnings. We'll get a drawdown on valuation during worries. We've seen it. That's where tech gets drawn down. But once we're through it, they want tech again. And I think that's important.
Yeah, I mean, I was about to ask you, but I think you answered the question. This rotation, I'm guessing you're saying came a bit too early. This rotation out of popular big tech and into some of the small caps.
I think it came too early. I think that what's been happening, and we've seen this cycle over and over, you get a worry during earnings season, whatever that worry is, whether it's margins, earnings, some kind of valuation pressure. The most overweight, most profitable investments that especially institutions have are in that tech space. That's where they take profit. They take profit right away, protect some of those profits, and as soon as we get through it, they buy back in again. And I believe that's something that's going to continue, because if you're worried about valuations, you're worried about the multiple compressing, and you're worried about earnings going forward because of potential growth, why wouldn't you buy the best quality, best earnings stories out there, especially if you can get them for a bit cheaper?
And Daniel, I got to ask you about Japan, because you've been kind of warning and seeing some flags here about this equity rally before. We certainly saw that reversal, massive one, just a few weeks ago. Is it purely just a currency that is driving that? And how should we look at equities now in Japan?
I think it is. I've been saying it is. There's been this underlying current that's been expressed that Japan is a new productivity, new earnings growth story, that we don't understand it. I haven't seen it. I think it's all been about currency weakness driving earnings repatriation that's been really helpful. And as soon as you don't have that earnings weakness anymore and you start to worry about earnings strength, then it's not the productivity and strong earnings story that we've seen before. I don't think it's necessarily a strong sell, but we just don't get that continued upside that we had, and there's certainly risk to the downside like we've been seeing as we get a bit more worry about that unwind still.
Right. So, well, okay. Let's put it simply. Bull market over in Japan?
The bull market is over. I think the bull market is over. Yes, I think we're gonna, doesn't mean we're gonna tank into a bear market, but we'll be neutral for quite some time here as we float through.
Yeah, I'm just wondering, just given that we're seeing so many different sort of narratives across asset classes, and Daniel, maybe you can help us kind of make some sense out of it, because equity markets continue to think it's soft landing. Bond markets are pricing aggressive FOMC cuts. FX volatility is still quite elevated. And then you have oil that seems to be diverging a little bit from gold, which is at a record high. How do we make sense of all that right now?
Well, let's try to put it together. I think oil markets and bond markets are telling us the same thing in a way. They're telling us they don't believe that the rate cuts are going to be enough to stimulate enough growth in that Goldilocks environment. Investors are saying, well, yeah, I kind of believe that as well, which is why we see institutional investors in multi-asset portfolios both drawing down a bit of equities and drawing down their fixed income portfolios and rotating into shorter duration still, which is quite fascinating. Oil is telling us that the risk to the supply side and slower growth is actually much greater than any geopolitical turmoil that might develop. And gold is saying, what else is there for a safe asset besides gold right now, especially if we expect the yield curve to potentially steepen, maybe even the long end rise here, which would really throw a wrench in the machinery. So I think it makes sense when you fit it together that way. And what it is saying to equity markets is you're a bit too optimistic.
Okay, well, Daniel, let's leave it on that fairly positive spin. We can take that as a jumping off point, quite literally. We'll hopefully not next time. Daniel and Gerard there, senior multi-asset strategist at State Street Global Markets. Right, just ahead, and Daniel was just talking about gold just there, of course. We're looking at a different kind of metal here, and slumping Chinese demand for most things, industrial metals here. The commodities market sounding its alarm on this housing crisis, dragging on the economy. The details in that story just ahead.
Yeah, later we're going to get the latest on the U.S. election with President Biden set to speak at the Democratic National Convention underway in Chicago. It's day one. This is Bloomberg.
Right, welcome back. You're watching the China Show. This price war is spreading across China's new homes. In fact, we have this piece out on the Bloomberg terminal right now. You're looking at some of the, in the tier 1 cities, we're getting some numbers now of how much these projects are being sort of marketed and scaled down.
Yeah.
So like Beijing, Shenzhen, for example. And these are quite substantial drops in prices here.
And I think it's at least 10 city governments that have relaxed or at least scrap some of these new home price guidances, according to what we've been hearing. And our sources are saying, like Shenzhen, as you say, there was a unit that basically slashed by 29% compared to just a year ago. So you're not just seeing it in some of the small cities, but even some tier 1 as well, which is quite interesting. Let's discuss the implications with our Bloomberg Intelligence senior analyst, Patrick Wong. So, I mean, does this mean that we're going to see more home price declines?
Yes, the problem I think now is you see the new home prices also coming down quite a bit because of the relaxation of the policy, right? So we have the situation that for lots of the first-tier cities, even some second-tier cities, all of them, they are cutting price for the developers' perspective. So which I think the secondary prices already come down a lot. So it makes sense for like major developers to cut price a bit if we see more government also doing so to relax the market, right? Which is good for the overall, I think, for developers to relax a bit. But overall sentiment will be tough because you see more noises, more news that prices cutting further.
Could you clarify for us too, Patrick? So why is there guidance given from cities to developers, for example? So there is guidance, pricing guidance, and what's happening now is, clarify if this is correct, they're now being allowed to price below where that guidance is. Is that a floor, for example, in prices? Why does this rule exist, is what I'm trying to get to.
I think in the past is the government want to control the market quite a bit to make sure that the price didn't move up aggressively.
Oh, to the upside, okay.
Yes, and then also, right, for the downside perspective, they always want a more stable market, right, in the past. But now I think the situation changed, right? We see the secondary prices coming down a lot. Developers can't sell at high prices. So now the relaxation means that the developers can sell more, hopefully, right? But of course, for end user perspective, that may work, right? But for the sentiment, it won't be good, right? Because price cutting further, and then some of the investors, they will wait, right, until the price really stabilize, which won't happen soon, right? Because developers are cutting price further, so it's more challenging situation.
So how is it going to affect liquidity among these major developers? Also, the earnings outlook too now.
I think for the developers with like potential like Vanke, Longfor, they are also keen to sell more. So potentially they will cut price further. So, but the thing is that for them, they can raise a bit in terms of liquidity, but for the earning perspective, the margin will squeeze further. So for earnings perspective, or whether they can pay dividend or not, is very challenging, right, for them. But for some of the developers, they already with good like challenge, already default, right? So they may not be too rushed, right, to sell sometimes because they already default anyway. So, so it's quite a different situation for lots of developers.
All right, Patrick. Thank you, Patrick Wong there, Bloomberg Intelligence senior analyst on this new story here about, new price guidance when it comes to homes in China. And speaking of this housing crisis in the mainland, has been weighing on commodity prices to say the least. And the corporate sector is emerging as a new source of concern as firms are cutting back on borrowing and production. Let's bring our Bloomberg commodities reporter Martin Ritchie joining us from Shanghai. What do you think is the message that we're getting out of this commodities market here right now? And how are firms adjusting right now?
It's been a fairly difficult month for commodities, especially if we look at iron ore and the steel market, which obviously is centred on China. Your previous segment there talked a lot about the housing market, which has obviously been important for construction activity in China for the last 20 years, but that's starting to fade a little. I think demand for steel in China has gone down by more than 10% over the last few years, and now there's really not much sign of this getting much better. So you've seen iron ore sort of come down almost, I think, more than 30% now this year. But the other metals, which had been stronger performance, have started to sort of flutter a little bit as well. So copper's come off, aluminum's come off a little bit, and there's really a lot of nervousness, not just in China when it comes to the metals, but what's going on in the rest of the world. The sort of jitters we've had about a hard landing in the US have also contributed. So looking forward, I would say that the base metals, the copper and aluminum, like I mentioned earlier, are probably sort of safer bets if we're looking to the future in China.
Right. Now, Martin, I want to ask you about copper in a moment, but just as a follow-up, I guess, to steel and iron ore, because this is a story that has really gained traction. We covered it substantially last week here. Are there any signs, though, that the government might be stepping in the way it did, I think, back in 2015, that massive move towards supply-side reform? Are there signs the government might be moving to curb some capacity here?
To be fair, there is some sort of growing buzz of speculation around that. So just to sort of beef up your question a little bit, back in 2015-16, there was a big steel crash. There was sweeping, very significant supply-side reforms, which involved a lot of shutdown of capacity. And because we're in another steel slowdown, because mills are losing a lot of money again and demand is falling, I guess the question arises is, will the government step in to rationalise production in the way that they did back then? But at the moment, that is more of a sort of speculative question that some analysts are asking and some people are calling for, rather than, I think, something that's under serious consideration as far as we know, because a difference between then and now is that the broader economy is much worse now, and that probably makes it much more difficult to go through kind of structural reforms that they pushed through back then. So it's something we just have to wait and see how it develops. I mean, it might be the wait on the market to see how the market adjusts production before they go ahead with sort of top-down reforms.
Yeah, with copper too, I mean, we're starting to see this rebound gain a bit more traction I mean, are we starting to see signs of recovery in copper prices now, Martin?
Nothing major at the moment because it's come back from the low it reached in recent weeks, but not a spectacular rebound. And I think that was a lot of that drop was around the sort of sudden fears about the global economy. And we're now back to the kind of point where we're pricing in that kind of prospect of supply tightness and actually reasonably steady demand, not a slump. And I think people are waiting to see, we're talking about Jackson Hole this week, we're waiting to see what the Fed does next. And I think any major moves this year are less likely.
Okay, Martin, thank you so much. Martin Ritchie there, our commodities reporter in Shanghai for us. Now, in other corporate stories we're tracking this morning here, a mainland Chinese court has accepted this liquidation application filed against a unit of China Evergrande Group, ramping up the pressure on the defaulted developer. Now, Evergrande is being liquidated in Hong Kong, where it is listed. Now, the ruling on Guangzhou Kailong real estate suggests that it may face the same fate in mainland China. Now, Bloomberg has learned that GM, General Motors, is cutting more than 1,000 software engineers, with the majority of the layoffs in the United States. The company confirmed the cuts in a statement without specifying how many people were affected. Now, GM had been hiring rapidly in this space in recent years as part of its push into EVs and self-driving cars.
And GoPro shares gained after the bell as it unveiled plans to cut about 15% of its workforce starting in the third quarter. The action camera maker has 925 full-time employees. GoPro sees a restructuring charge of $5 to $7 million, with the majority of it expected in the last quarter. We have plenty more ahead. This is Bloomberg. All right, we're taking a look at when it comes to markets here. It's not just the FX moves, but we're tracking a lot of movers here this morning across equities, just given that we continue to see some gains here in the region. And Kuaishou, Xpeng, Sunny Opticals is just some that we're just waiting for when it comes to earnings. But Kuaishou, Xpeng certainly is one that we're watching out for. And we're seeing, at least in the EV sector, Xpeng doing quite well leading up to those results. We're up about 1% here. Also watching Sunny Optical, China Telecom as well. Some big moves when it comes to some of these Japan movers as well.
Yeah, I'm looking at Japan displays up 24%. I'm struggling with news and why this is actually moving as well. What we do know, of course, is it's certainly outperforming. I think that's one. It's up the most in about 7 weeks. The broader read, of course, is the Topics Index is up about 1% right now. Let me just bear with me, and I'm looking at my terminal right now. We're up 6% yesterday. Give me a second here. Let me see what the power of the terminal is able to bless us with as far as information here. Okay, well, there doesn't seem to be any news here. Okay, anyway, let's change the page then. 7 and I, here's where news is. So yesterday, a big move up. A little bit of downside today, although over 2 days we're up 14% on the back of this potentially the largest potential takeover of a Japanese company from a foreign firm, of course. Lots of angles to the story.
Yeah, the fact that, I mean, they've changed some of the M&A guidelines in Japan, so maybe this is just the first sort of big deal that we could be seeing out of Japan. But certainly, what market impact does this have, just given the valuation is certainly one key hurdle there. Also, when it comes to the competition in that space as well, just given how much 7-Eleven dominates around the world, that certainly is going to be a key focus there as well. More on that deal coming up. This is Bloomberg. All right, close to 11:30 in Japan. We're having that lunch break here.
I need lunch.
Yeah, we're hungry, right? We're hungry for some risk, it seems, today here as we count down to Jackson Hole. It seems like Japanese equities are doing great. We're up about 1.7% on the Nikkei, 1% gains in the Topics as well. Dollar yen, we stabilized a little bit, but certainly we're holding on to that strength that we've seen of late here. And certainly the bets back on whether the BOJ is going to hike again, that speculation seems to be ramping up. As we're not only only are we counting down to Jackson Hole and Powell's speech, but Ueda-san is speaking in Parliament.
There's some dark comedy, really, when I think about the Japan interest rate story. It reminds us of this dark episode in markets 2 weeks ago. Well, yeah, I guess what is he going to say? And I think, if I'm not mistaken, his speech, or it comes after, I think, Jay Powell, if I'm not mistaken. I could be mistaken there.
I think it should, well, I don't know about the timing.
Yes,
but it's on the same day, I know.
Well, they have a bearing on one another. Certainly what Jay Powell says might determine, too, how hawkish or not Governor Ueda sounds, of course. Right. Over in Japan, of course, the biggest story, I believe, that people are talking about here is this potentially big deal with 7&I Holdings here. And, not to mention, is Circle K actually a better convenience store than 7-Eleven? That's a holds up. To me, they're the same. What do you think? Convenience stores. I just
putting me
entered
on the spot here. I don't know. I mean, I think 7-Eleven is the big. There's more stores.
There's more of them around. Yeah.
There's more of them, so maybe that's why. But certainly, does it make sense strategically that these two have a happy marriage? Right. We did hear from Amr Farzadeh, Japan equity strategist at Asymmetric Advisors. He spoke to us earlier about the type of pressure 7&I management will be under after this takeover approach.
Look at the number of convenience store outlets that Couche-Tard has, only 16,000 versus 85,000 for 7-Eleven. It's almost like a reverse takeover, right? So it's although the market cap of Couche-Tard is much higher. So yeah, look, it depends on the cash component of the bid as well. But I think anything above 7 trillion yen, the market cap right now is about 5.6. But anything above 7 trillion yen, and the management would be under a lot of pressure, particularly by active investors.
Okay, Stephen Engel, our Chief North Asia correspondent, is here with us. Of course, you've covered 7&I. Of course, you talked with the CEO.
How significant a lot of those convenience stores too. Tamago sandwiches, the egg sandwiches, and the onigiri. 2 billion, I think they sell every year. Yeah,
you've done some of it too, right? You've tried your luck making some of these onigiri.
Yeah, just taking off the wrapper. I mean, pretty much at the factory out in the Saitama, I believe it was. We went to. We did meet with Ryuichi Isaka. There we are, right there. I think it was March or earlier this year. And obviously this was just coming off where 7&I Holdings sort of fended off, again, moves by activist investor Value Act Capital. They wanted to unlock more shareholder value because the numbers suggest that Value Act was, they're looking after the minority shareholders to a certain degree. And, Isaka-san essentially told me that, they just come off the heels of buying Sunoco and Speedway in the United States, adding more of those roadside pit stops to the convenience store chain in the United States. They had recently sold Sogo Seibu, the department store, in April as well this year. They talked about they're going to look at possibly spinning off their other legacy and underperforming department store, that's Ito Yokodo. So again, they are making steps to kind of unlock shareholder value. But if you look at the numbers, look at this. Number of stores. 7&I is much bigger than Couche-Tard. Couche-Tard is the Canadian owner of Circle K that has made this offer, this so-called friendly, non-binding proposal. They haven't revealed how much they're offering, but at the end of the close yesterday, it was worth about 38 billion US dollars. So I wanted to bring up those numbers again because that kind of tells you about that lack of value to shareholders that Value Act Capital was talking about. Essentially, 7&I, 85,000 stores around the world, compared to Couche-Tard, 16,700 stores. Market value of 7&I, 38.5 billion. Couche-Tard, much smaller, fewer stores, less of a footprint, $58.5 billion market value. So they have a much higher, essentially, Couche-Tard is worth about 9 times more on enterprise value per store than 7&I.
Okay.
So again, they see this as potentially the opportunity now with the yen where it is right now, the market sentiment in Japan. And look, Alain Bouchard, the owner of Couche-Tard, has wanted 7&I. They've wanted 7-Eleven for quite some time. The first overture was back in 2005. That failed. He moved on to Carrefour. That failed. Now he's trying again for 7&I.
And does it make strategic sense for 7&I to even consider this, or should they be cautious about accepting this offer?
They are considering it. They put out a statement, Seven and I put out a statement saying a special committee of independent outside directors will make a, quote, prompt, careful, and comprehensive review of this proposal. I mean, they have to do the due diligence on this. If the goal is to unlock shareholder value, maybe this deal is the right one to accept. But again, there are changes afoot in Japan, obviously, in corporate culture, also corporate governance, and, you know, but Japan's been fairly protectionist. There have not been foreign takeovers of this size in Japan. Few and far between. This would be by far the largest one. Again, we don't know the price tag, but if we're talking 38 plus billion, it would be an extremely large one. So we'll have to see whether this is a watershed moment for corporate Japan, whether this potentially could lead to others, or do you go back to what has been the roadmap, and that is shut it off, not happening, internal change. We'll have to see.
All right. Steve, thank you. Stephen Ingle there, our Chief North Asia correspondent on that 7 and I potential deal here. It's been a busy in terms of the M&A front as well in the last few weeks. And some other stories we're tracking for you as well, as Bloomberg has learned that Paramount could extend a deadline for rival takeover bids. And that's it. Longtime media investor Edgar Bronfman Jr. makes an offer for the company. The parent of CBS and MTV agreed last month to combine with David Ellison's Skydance, but the terms allow Paramount to solicit and consider other offers during a 45-day go shop period, which expires on Wednesday. AMD shares surged in New York after the company announced it's buying server maker ZT Systems. That's in a cash and stock transaction valued at nearly $5 billion. Now, ZT has extensive experience making server computers for owners of large data centers. The takeover boosts AMD's efforts to challenge NVIDIA, which has been the runaway leader in the market.
Right. Now, speaking of markets, Saudi Arabia's stock exchange is looking to Asian investors to boost activity. It's in the Middle East's largest market. Now, we spoke with the Tadawul Group's Chief Strategy Officer, Lee Hodgson, for Bloomberg. The Tiger Money podcast, and of course, episode 8 drops today, and he told us more about their growth ambitions and how the kingdom is looking for opportunities beyond oil.
Personally, I think tourism, just from my own experience with my family, traveling around the country, there are remarkable sites, there are remarkable places in Saudi that the world has just not really been exposed to. I mean, and as the new airline gets going, as visitors start coming to the new hotels, and tourism expands as it is already beyond religious tourism. I think that sector's, going to be, offering enormous upside. And the numbers are already huge in terms of tourists coming to the country and growth. But I see it continuing.
Certainly some of the things that we notice from outside looking in, you obviously have one very big company listing. You have valuations that are either extremely stretched one side, extremely cheap the other. The perception is, and correct me if I'm wrong, a lot of the flow is driven by retail investors, and that might or may not, and chime in, may keep foreign investors that you need away until part of the piping is sort of, cleaned up and replenished and upgraded. Is that an issue that you're aware of?
We've spent a lot of time, money, and effort on building out what I describe as the internationalization, institutionalization and electronification of our marketplace. If you think about those firms, an electronically generated business in Europe accounts for 60 or 65% of average daily equity markets. In Riyadh, it's about 20%. We've got a long way to go, but that's changing, literally every month. So we're seeing a tremendous amount of electronification, institutionalization, and internationalization coming to the market. And look, it won't change completely overnight, but there are very, very strong signals that that's now, the sort of makeup of the liquidity on the exchange is changing dramatically.
There are very few places in the world that have not just a vision, and of course, in the case of the kingdom, the Vision 2030, not just a vision, but the resources to actually back up trying to move the economy in different directions, diversifying away from oil, for example, in this case. Does it ever occur to you that money's an issue? Again, oversimplifying an issue there. People know Saudi is a very wealthy country. Is money an issue?
I think the perception of Saudi is different from the reality. I think it would be a mistake for international investors, listeners to this podcast, to be thinking that, there's an unlimited supply of money and money's just thrown around. That is absolutely not the case. In fact, I would argue that, from my own experience, the way that, our major shareholder is PIF, our relationship with PIF, managed very, very carefully through, some very strong connections. When we've made acquisitions, the level of discipline, rigor and governance that we go through around valuation, around post-merger integration, KPIs is gold standard.
And that was the Saudi Tadawul Group's Chief Strategy Officer, Lee Hodgkinson, speaking with David for Tiger Money. Of course, you can catch that podcast every second Tuesday on Bloomberg.com, Apple Podcasts, YouTube, and Spotify. And coming up next, we shine a light on a special economic zone in Southeast Asia's Golden Triangle and how it's becoming a hub for criminal activity. We have details next in our Big Take. All right, we're taking you live to Chicago, of course, first day of the Democratic National Convention there in the Windy City. And obviously, we're still counting down to that speech made from Joe Biden. It should be happening in the next few minutes or so. But certainly what we're going to see is really a Democratic Party that is, celebrating the legacy of Joe Biden, but also passing that torch to Kamala Harris. We did also hear from Hillary Clinton, AOC, just the last hour or so. For the latest on the U.S. election, let's bring in Bloomberg's Vonnie Quinn. She joins us out of D.C. with the latest. And Vonnie, what were we likely to hear from the president in this speech today?
Yeah, you mentioned it, Yvonne, a cascade of speakers all leading up to this keynote speech, after which Joe Biden will leave for vacation for a few days in order to leave the DNC to Kamala Harris, whom he very much wants to succeed him as president. So what we anticipate hearing from President Biden is to spotlight really how his administration brought the U.S. economy back from the pandemic. Also, he'll likely mention the legislation on infrastructure and also climate, which was a big plus for the Biden administration. And he will talk a lot about how he protected democracy and how democracy needs to continue to be protected. That's obviously a slight against Kamala Harris's opponent, Donald Trump. We know that Biden cares a lot about this particular issue and is very concerned for the country if it were to be Trump that is elected. So the theme for Monday night, it's for the people, and that's what we have been hearing all night from the various speakers, which included union chiefs, very many of them talking about Kamala Harris's record on labor rights and fighting for labor rights. Also, other politicians, you mentioned some of them, Hillary Clinton talking about how Kamala Harris will break through the glass ceiling and will, be the first woman of color and an Indian woman as well to accept the presidency, having been vice president, if she is to be elected. And bear in mind, polling is directionally very positive for the Democrats, right? She has made up the Biden deficit in the polls, and in many instances, including in some swing states, she has exceeded Donald Trump's polling numbers at this point in time. Still 10 weeks to go, of course.
Okay, Vonnie, thank you so much. Vonnie Quinn there in Washington for us. Okay, some breaking news to tell you about right now. This crossing just the Bloomberg terminal. Red headline crossing here. The Wall Street Journal is reporting that, okay, here we go. Edgar Bronfman is making a bid here. We're looking at, I'm just looking at some of the numbers here, $4.3 billion here for Redstone's National Amusements. In terms of what it includes, $1.5 billion for the balance sheet of Paramount, and enterprise value on National Amusements here for $1.75 billion. Of course, this is according to the Wall Street Journal, formally making his play, of course, for Sherry Redstone's media empire. That's the latest story, of course, we have based on the reporting out of the Journal here as well.
Yeah, we'll continue to watch those developments on that deal, a potential deal. Another world news that we're following this morning as well. The U.S. Secretary of State Antony Blinken says Israel has accepted a ceasefire proposal to halt the war in Gaza. Blinken says the next step will be for Hamas to say yes to the plan. The accord builds on a proposal President Biden put forward in May that could pave the way to a permanent truce in Gaza. Blinken will next travel to Egypt and Qatar to discuss what their leaders are hearing from Hamas. British tech tycoon Mike Lynch is among those missing after a luxury yacht with at least 22 people on board were struck by a tornado and sank off the coast of Sicily. A source says Lynch's wife is among the survivors, but at least one person is dead and 6 others are missing after the boat sank early on Monday. Where the couple were celebrating following Lynch's acquittal on fraud charges over the $11 billion sale of his company, Autonomy, to Hewlett-Packard back in 2011.
Okay, let's turn our attention now to our big take today. Southeast Asia's Golden Triangle, you might have heard about it, long had this reputation as a center for illicit drug production and also trafficking. But law enforcement agencies says illegal activity is now thriving inside a designated special economic zone where the borders of Laos, Myanmar, and Thailand are effectively meeting here. Bloomberg Originals has been looking into how a Chinese businessman is now seen as a de facto ruler of this remote region. Here's a preview.
The Golden Triangle Special Economic Zone is an enormous center for criminal activity of all kinds. Drug trafficking, human trafficking, and scam operations.
Victims have been mostly deceived by online ads promising career opportunities abroad with good pay.
They keep my passport when I arrive in the Laos land. After that, they teach me how to become a scammer. I work here, this building.
One man allegedly controls this transnational crime hub. Chinese national Zhao Wei.
Zhao Wei is in charge. He sets the rules, and Chinese organized crime groups have become some of the most powerful criminal networks, both in Southeast Asia and beyond.
Laos is a communist country with close ties to the Chinese Communist Party. So China has dramatically more influence in Laos than, say, the United States. The big question here is whether China eventually decides they want to put a stop to this or not. One of the mysteries here is China's attitude to Zhao Wei. They seem to be overall somewhat tolerant of him.
So who is Zhao Wei, and why is an alleged crime boss allowed to run this place like his personal kingdom?
Let's bring in that question to our Bangkok reporter, Papicha Tanaka-Sampipat. She has more on this big take and contribute to this story as well. Papicha, tell us a bit more about this businessman. Who is Zhao Wei?
Sure, Yvonne. The Golden Triangle Special Economic Zone is a development project in Laos founded in 2007 by a Chinese businessman called Zhao Wei. He has a 99-year lease on the project, and the Laos government also has a 20% stakes in it. From the outside, this place looks like a normal Chinese city where the yuan is the main currency and Chinese is the main language spoken there. And of course, the beating heart of the GTSEZ is the King's Romance Casino, which you can see even from the Thai side of the Mekong River. But beneath all this facade, there's a lot more going on. Foreign investigators have believed this place to be a sort of self-governed enclave for all kinds of criminal activities, be it money laundering, human trafficking, drug trafficking, or most recently scam operations as well. And in 2018, the U.S. Treasury Department imposed sanctions on what it calls the Zhao Wei transnational criminal organization. But obviously, that has had no real impact on the GTSEZ, which is still growing and expanding, even in plain sight today.
Yeah, and tell us some of the other stories that you managed to unlock here. I mean, you've spoken to some of the I guess some of the people, Patricia, who were forced to work here and then managed to just get out and made it out. How are their stories similar here?
Sure, David. We spoke to many different victims who have made it out from, they come from many different countries, and we also spoke to rescuers in Thailand as well. And what we've heard is similar stories about scam centers across Southeast Asia, including in Myanmar and Cambodia as well. In terms of Laos specifically, the victims recounted tales similarly of being recruited by online headhunters who promise high-paying jobs in Thailand, and they would arrive in Bangkok only to be transported across the Mekong River into Laos, where they would be detained and forced to work as online scammers, as well as live in very horrible conditions. And what they're primarily doing there is called the pig butchering scams, where they would be having a fake identity and building relationships with online targets. And over time, they would convince these targets to part with all the money.
All right, a fascinating story there. Our banker reporter, Papicha Tanaka-Simpipa. Make sure to check it out on The Big Take today. Subscribers, you can watch that report in full right now on the terminal or Bloomberg.com. It'll be on the Bloomberg Originals YouTube channel a little bit later on as well. This is Bloomberg.
Right. First stock on your screens is an earnings story. The second one has plans to invest in Turkey, $500 million. And the third one is a restructuring story. Kaiser re-entering restructuring support agreement with its creditor group.
Yeah, we're going to leave you with those live pictures out of Chicago with the first day of the DNC and President Biden set to speak just moments away. This is Bloomberg.